Hello everybody and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Charles Nenner, president of Nenner Research. Charles, welcome back. Nice to have you.
Nice to be here.
Now you are this cycle guy, the guru guy. I'm always interested when you come here because I want to pick your brain and see now sort of the lay of the land, so to speak. How do things look based on your research, which is basically the cycle predictive research? Let's start right off. We'll go with gold.
Well, gold everybody wants to know about. You maybe remember we sold gold around 1900. We played a couple of bounces, but it didn't really go long. And my cycles say we should be long in July.
This coming July?
This July, the bull market should resume. The risk on the downside is another $100. But then the longer cycle that brought the whole thing down from 1900 is bottoming finally. And then we should go back to the highs.
Now I do remember the last time you were here, pretty much the same scenario. You talked about gold had hit a bottom in that high 1100 area. I think you were looking for that bounce up. We got it, so pretty good call on that one. But so you don't see it going below 1100. I mean, there's some little forecasts out there, maybe even coming down below 1000. Your work doesn't show that?
No, I developed these programs, and they worked very well for Goldman Sachs when I was there, and they show two things. They show the date things are going to happen and the level. So it's not that at random something goes down and you don't know where it stops. It has a certain momentum and you can calculate where it stops. And it's I don't see it going below the middle 1100s.
Okay, and I'll just mention that you did work for Goldman Sachs, proprietary trading. You did a lot of their research during the time that you were there for their prop trading, right?
Right.
Okay, what about, let's talk about the stock market. I'm very interested to see your view on that because we recently made new all-time highs in the Dow Jones and the S&P 500, not in the NASDAQ, which has been a little bit under pressure. So what is your outlook on the stock market, U.S. stock market?
Well, very clear, we were long a long time, and the target on the S&P was 1895. We hit not twice, 1895, so we're totally out of the stock market.
So you got that right on the button, 1895.
1895 was the target. And the target date for a top, possible top, is around the 6th of June. So since we don't like to be too emotional in markets, we first go out and then we check it if we want to go short or not. If I remember well, we're going short if it closes, if the S&P closes below 1860.
Okay, and then what would be the downside target there?
Well,
or
maybe
you just have to wait to see that how it plays out?
Maybe you remember my long-term downside target. Don't get too depressed. It's still 5,000 on the Dow.
5,000? You're never going to see that.
We're going to reach it by 2020.
2020.
How did I come with the 5,000?
Where's the market going to be at 2000? By 2020, the Dow could be at 36,000. I mean, so if you're making a call of 5,000 in 2020, we don't know where the Dow is going to be, but presumably, I would guess it's going to be a lot higher than where it is right now, wouldn't you?
No, I think it's going to be down.
We're going to stay here for another 6 years and then drop to 5,000?
No, we're going slowly down.
Slow down.
Slow down.
Based on what? Now, you don't base any of this on any sort of fundamental forecast. You base it on your cycle work, right?
Well, I can talk about fundamentals like everybody else, but I don't think I'm better in fundamentals than other people. So what I do is I see cycles coming down into 2020. And the first two crashes that the Dow Jones had gave me a price target of 5,000. So according to this, it's still a bounce, and we have to go down to 5,000.
Oh, that's depressing. I hope it doesn't happen. Okay, let's talk now about commodities in general. What, you know, commodities had, and we all know this, had the big run up from early 2000s, peaking out probably 2008. It's been a little bit of a struggle since then. What do you see overall, the picture for commodities?
Commodities continue in a bull market for a while. In a bear market for a while. Definitely.
So the bear market now is more or less, is it a bottoming process, or is it really prices trending lower?
trending lower.
Across the board?
Soon crude oil is going to join on the downside, which is important. We're going to have some spikes in corn and wheat.
Like weather-related sort of, maybe this
who
year
knows?
a drought,
Maybe
something?
it's political. You never know what the world comes up with. But the commodity bull market is over for a while.
But that's a good point. Political. You never know what the world is going to come up with. We have a situation right now between, Ukraine and Russia, geopolitical in nature. The United States taking a position there. So you don't factor that in, because I guess your process is that you don't know when these things are going to happen. You stick to your big sort of macro cycle predictions, right? And I guess that tells you that incorporates all these sort of unknown events. If I look around at the economy, which clearly has come back, from the depths of 2009, there's still a lot of people who are hurting out there, and the economy is weak. I mean, we had very weak growth in the most recent quarter, 0.1%. I look at it as policy. I mean, there's people at the levers, whether it's in the United States, in Europe, there are people who are implementing policy which is going to have a direct effect on economies. Don't you take that into account at all?
I think it's the other way around. Let me give you an example. Let's say you own IBM,
right?
And IBM goes up 80%. And now IBM comes out with a great number. What is IBM going to do the next day? If the cycles are up, IBM goes up, and the Wall Street Journal will write, investors poured in because IBM did great. But if the cycles are down, they said they sold it because they don't think IBM will do better next year.
Yeah, but that you're talking about a short-term thing. If you look at the stock market over its entire history, it's literally a straight line up. I mean, you cannot even find, you need almost a magnifying glass to find the Great Depression in that trend of stock prices. Corporate profits, don't you think that has something to do with it? Corporate profits are at an all-time record high. Wouldn't that also explain why the stock market is at an all-time record high?
The stock market is an all-time record high because they knew the corporate profits would be good. And I still continue to warn about deflation. We're going to get a deflationary problem and then see what happens to corporate profits. It's not going to do well.
Well, deflation is an interesting point, and I would tend to agree with you on that. And from my perspective, it's because of policies like austerity, which are keeping economies still pretty weak. But yet, that's kind of been, the nature of our economic environment now for 5 years, and profits are still going up. Okay, let's move on to how about geopolitical areas or countries. What about China? Everyone's looking at China right now because we've seen this contraction in growth. China is, everyone knows, the second largest economy. Some say soon to surpass the United States. What do you see, if anything, with respect to China?
By the way, in 1900, China was the second economy also in the world. I don't think they have to hurry up with creating an internal market, because that's how you develop. You first start exporting and then you need an internal market. I don't think it's going too well, the internal market. So I don't see it continuing as the machine that's going to help us all out of the recession.
So don't expect to see China surpass the United States anytime soon. All right, so to sum it up, got to be long gold if we get another dip down to 1200. I think that sounds like your strongest idea, and be a little bit cautious when it comes to equities, when it comes to stocks, and still this deflationary trend pressuring commodities, right?
Correct.
All right, Charles Nenner. Always fascinating, always fascinating. Thank you very much.
You're welcome.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.